Welcome back, Reluctant Preppers. We have a returning guest tonight. Brother John F., founder of BrotherJohnF.com, Silver for the People, is here with us again on Reluctant Preppers. He's going to weigh in on how much gold and silver do I need to survive if there is a financial collapse, and also looking at protectionism versus free markets, especially as we look at concerns about dumping of foreign-made goods on American markets and how that affects our economy. Brother John F., thank you for joining us again here on Reluctant Preppers.
Well, it's great to be back, Dunnigan. Thanks for having me.
You bet. Could you give our viewers a reminder of your background and why it is that you are weighing in on all things having to do with financial sound money and in freedom versus deception on finances?
Oh, my background, I've done so many things. I've been a stockbroker, a futures broker, spent some years in law school. Been a silver stacker most of my life, run various blogs since the internet started, dealing with alternative media, conspiracies, etc. And I decided to do Silver for the People to just promote what I think is probably going to be the best protection for people moving forward, going into probably the biggest crisis we're going to see, which is the decline of the power of the U.S. and the power of the dollar going forward.
So jumping right into that first topic then of how much gold and silver do I need to be financially secure if the economy collapses, where do you suggest people start in evaluating the answer to that question?
Well, I'm not a financial advisor, so I can't give financial advice. I can just say what I do and the members on my member site do is primarily concentrate on silver simply because silver is so undervalued relative to gold. I think the ratio is still 70 plus to 1, which, as Eric Sprott and Mike Maloney and many others have pointed out, doesn't make any economic sense because it's coming out of the ground at something like 10 or 12 to 1, and the amount above ground silver is a pittance if you look at dollar values compared to gold. So mainly concentrate on silver, but gold is definitely something to keep an eye on as well. You want to have some. I'm also into cryptocurrencies, Bitcoin being the granddaddy of them, but there's a lot of other alt cryptocurrencies as well that have some promise that offer differing features. Those are really the three main types of assets that are outside of the system in the sense that they're not really digital entries on the Fed's keyboards, computers, et cetera, the bank's money, which is really just a series of digits and not real value, which can be taken away at any point. Basically promises that can be broken. Now, a lot of people are going to argue Bitcoin isn't that, but I think if they would study it, find out that it's a decentralized cryptographic ledger, they would understand how it is limited by the nature of it. Now, as far as to how much you should have, well, I think the traditional Wall Street financial advice used to be have 10% of your assets in the precious metals. I'm not really sure if they meant that to be mining stocks as well. I don't believe in mining stocks at this point, but I think that people should have much higher than that percentage, looking at, where we're going. But then again, if even the population in America alone allocated 10% of investment assets to real gold and silver, that's enough right there to explode the price to the moon. So it probably doesn't take a lot to hedge, but the thing that's great about silver is that it's really easy to stack physical silver. You can still get junk silver, silver dimes, a few bucks for a dime. That's not that hard to do. And you can build a pretty decent nest egg just stacking silver. Gold, it's a little bit harder to do. You can go out and get some 10th ounce gold eagles, but there is a pretty good premium on those. And it's a lot more difficult for the common person to stack. And I believe that if the silver manipulation game that they're playing, which they've been playing for a very long time, if that is ever broken, it's not going to be broken by a large player, sovereign fund, or country, but it's just going to be a large number of small individuals that overwhelm the system.
So what gives you confidence that small holdings on the parts of many individuals is enough to overwhelm the physical demand? We've seen such a resilience of the price suppression over the past 5 years in the face of record physical demand especially from India, China, and the Asian countries. But what gives you confidence that ordinary retail type physical demand is sufficient to overwhelm the price manipulation? And what do you see as the mechanism for that overwhelming if they seem to have an unlimited fiat ability to just write down futures contracts against any quantity, whatever it takes to crush the demand side on the paper market?
Well, if you think about the two primary types of investors, you have fundamental investors and then technical investors. Say you're just talking about stocks or something. Technical investors are people who buy something because it's going up or sell it because it's going down. Things like Apple stock or Amazon.com. Are those stocks really worth those incredibly high prices based on some type of metric of PE ratio or price to sales or something like that? Probably not, but it's a bandwagon effect and people buy them because they're going up. Now, if you're going with the traditional Warren Buffett, or at least it's attributed to him, the fundamental type of investor is someone who's looking for an asset that's undervalued, something that has inherent value. And when markets readjust, then the price of that asset will readjust to a higher price. Those are people who are looking to buy undervalued assets. That's very different. And those types of styles of investing, they play out differently in the marketplace. So if you look at the history of silver, for example, people would ask, most of the people who are in the alternative silver community, I'll call it the silver stacker community, recognized what happened in May of 2011 with a series of coordinated attacks against the price of silver when it was approaching that historical nominal price of $50. Including mysterious margin increases in the middle of the night, strange news about Obama and bin Laden and all this stuff happening all at the same time. And this stuff just being a coordinated attack. Now, if you're going to take a conspiracy bent towards that, you want to ask the question, why would they want to stop it rising at that point? And that's because of the technical bandwagon effect. Because if it broke into new highs, if you remember, gold's old highs were around 850 and gold took those out, significantly. Gold just kept rising all the way up to 1900. Silver could go through 50 and go, who knows how high it could go when, if there's some type of buying frenzy of the real asset, because it's so rare. There's, I think they only mine like 800 million ounces times current prices. What is that? A few $1 billion. It's nothing. It's infinitesimal amounts of money. The government wastes that every day. So an attack against a technical breakout is something that they do because people are discouraged. And we saw a very long intermediate bear market in silver after that happened. A lot of people went crazy, oh, I'm losing money and everything. And people who were stacking weren't too phased. I was stacking all through that phase, didn't buy too much. I think 32 was the highest I paid. It wasn't a very long run. I think it started at the beginning of the year and blew up in May. But so that's a certain type of investor. Now, what we've seen recently with the carnage that we had, silver was looking strong, trying to get through the low 20s, 21, move up to that 26 resistance level that it has had for quite some time. And then we just had this recent smackdown of about $2 from 19s to 17s. But what we saw, you could see it covered on Silver Doctor's other news sites, that the U.S. Mint was inundated with Silver Eagle requests. Now, I haven't seen the junk silver market tighten up yet, but we've seen it in the past where the market's really tightened up. Now, that's a really important reaction because that's the opposite of the reaction that we had in the 2010 run-up, which is a buying frenzy, people buying because it's rising. This is people buying because it's falling, and they're buying large amounts. So they're waiting for a price drop to step in and buy. That's fundamental buying. That's stackers. That's the people who have the ability to overwhelm the system. I've covered the math many times, but you can just throw the figures out there. If just 10 million people bought this much, they'd run out. In fact, I think 50 million ounces of silver was one of the key points in American mining history because originally they were required to source the silver domestically. And I think, as Bixwer has pointed out, the Treasury Secretary had to revise that directive because now we're importing more silver than we produce just so we can produce enough Silver Eagles. So there's a potential for people to, like I gave you the 10% allocation. If the American public allocated 5% to physical gold and 5% to physical silver of all their investment dollars, then it would be so overwhelmed that we don't even know what the price would be.
If we could turn our attention to that second topic about impacts on the economy due to foreign so-called dumping of especially Chinese goods on the U.S. economy, and what your take on that is, because you were explaining your free trade inclination, and if you could help us make some discernment to be more able to talk meaningfully about this, so that we don't just get caught up in sound bites, but we really can pull apart. This is certainly a hot topic in the current presidential election between Hillary Clinton and Donald Trump, talking about whether or not they support free trade agreements or international trade agreements, and we've certainly been seeing, whether it was from the steel industry, the aluminum industry, the solar industry, just on down the road, industry after industry in the U.S. saying that they're being victims of what they call illegal dumping of low-cost goods or below-cost goods from China. Could you help us to sort of pick apart the distinctions there so that we can speak with understanding on that topic?
Absolutely. First off, I wanted to point out that we had a significant percentage rise last night with Bitcoin buying out of China that was happened at the exact same time with a new breakout in the U.S. dollar yuan cross, which is kind of interesting to see. Those were really the only two that I could find coordinated. I did happen to find a news story right after the debate where Hillary Clinton talked about Donald Trump sourcing Chinese steel to build his skyscrapers. So I think the reaction out of China is pretty clear. We know that Trump has been talking about it, and now Clinton is talking about it. So from the Chinese perspective, it seems that there's going to be protectionism and a potential trade war regardless of who wins. At least they're maybe thinking about that now. So again, back to this issue of dumping. The concept of dumping is really fairly simple. It's using any particular market to drive the competition out. I think probably one of the most famous ones that most people can think of is they think of Walmart coming in and wiping out all these businesses. But a key to dumping is that you're operating at an economic loss for the short term with the prospect of having an economic gain in the long term. In other words, once you drive your competition out of business, then you can raise your prices up to a higher level that you wouldn't have been able to if those competitors were in business against you. Now, that doesn't really make sense when we talk about China because, how long has this been going on? Are we actually to believe that the Chinese strategy is to operate at a loss on a continual basis? Does that really add up? It doesn't make sense. And so I don't think you can make a credible case that it's dumping. It's just being out competed. Now, traditional free trade theory is based on mostly agricultural goods, agricultural economies. And I think virtually all economists recognize that free trade is a good thing when you're talking about no tariffs and countries doing the things that it is easiest for them to do. I think use growing coffee in Colombia or bananas in Central America. We wouldn't expect American farmers to be able to compete just because of natural things like weather and things like that. Now, when you move into manufacturing, it becomes a little bit different because you're talking about all sorts of things. As I pointed out with China, you have power costs. Now, power costs in China are significantly lower, but administrative regulations are also significantly lower, especially for small businesses, taxes, etc. And then, of course, we all know about the smog problem in Beijing and other cities in China. The environmental restrictions are very, very low. So that makes them more competitive. All of those things make them more competitive.
You didn't mention labor costs. I assume that was taken for granted?
Yeah, I mean, that's, that it's been rising significantly. I mean, China is kind of moving things now to Vietnam and some of those other countries. I think, as Jimmy Rogers has pointed out, Myanmar and some of those countries probably are going to boom when they see some of that moving to their countries because they're lower cost. China's standard of living has been rising dramatically for the last 15 years. Phenomenal growth in the wealth of their citizens. But for someone to argue that this growth in China has occurred as they've been operating at a loss, it just doesn't make any sense. What we're talking about is American manufacturing unable to compete with anyone, really. And the reason why is because the overhead of operating out of this country, the regulations, the politicians, the size of the government, the unbelievable size of our government. I was just looking the other day about the post office. I think we have almost 1 million postal employees in this country, whereas Great Britain has 1/100th of that number or something like that. It's a ridiculous number. 1 million postal employees. That's ridiculous. That's something that already should have been done away with. I mean, everybody's, Amazon's moving forward, probably going to put FedEx and the others out of business. So, I mean, here's this dinosaur. We're hanging on to this. And that's just one example of how uncompetitive we are. So is there a chance that either one of these candidates, if they get in, are going to impose tariffs? Probably not, because we know what happened in the 1930s. A trade war ensued and everybody raises tariffs. Now, am I saying that our trade with China is fair? No, I don't think it's fair trade because obviously China hasn't floated their currency. They're trying to control the money that, keep it in the country. So it's not easy, and there are no easy answers to this. The only real answer that we could do, and it's not going to happen until some type of collapse, is to dramatically cut the size of our government, dramatically reduce the number of federal employees, state employees, municipal employees, the tax burden on the American people, to reduce regulation and to make it profitable to do business in this country again.
In addition to everything that you mentioned, I heard it said that China is not necessarily they're not playing to solve for the same function or the same outcomes that American or other Western companies are. Western companies are solving for current profit to their shareholders, and the Chinese companies, at the instruction of the government, are solving for full employment. As you look at sort of the motivation that drives the Western world to shake their heads at how it is that Chinese companies keep persisting at cranking out production at full capacity, even when their internal market is unable to absorb that capacity because of recession, of just unable to keep up with that huge output, and then that output is flowing to the rest of the world, who is also in a recession and able to absorb that capacity. What does your analysis tell you about that? We may be asking the wrong question, and so we're not getting the right answer.
Well, I mean, you have to look at the growth of the wealth of the population in that country. You can take any number of graphs of wage growth, GDP growth per capita. I've pulled all the stats from trading economics. A lot of those factors have gone up tenfold. It's pretty hard to argue that China's been operating at a loss this whole time as they're getting wealthier and wealthier and wealthier. I mean, we saw the same thing happen in Japan. Japan was essentially a rock. There's very few natural resources. They didn't have really much of anything that would make them competitive. You can think about Singapore as another example. It's not so much a matter of what resources you have as much as what type of policies you pursue. And when we think about Japan, for example, back in the 70s, stuff coming out of Japan was considered to be junk. Maybe even 10 years ago, stuff coming out of China was considered to be junk. But Japan pursued a policy of trying to get strong forex reserves, and the only way to do that was to outmanufacture their competitors, to produce a better VCR than anybody else, to produce a better car. We ended up with Sony. We ended up with Toyota. We ended up with Nissan. We ended up with Honda. And so it's possible to do that. It's happening in Singapore now. It's just that that's not what we do. We do the exact opposite, and we're going the opposite direction. So I just don't buy the argument that Chinese manufacturing is them operating at a loss for full employment. If that were the case, then they would be heading the direction of the Soviet Union, which is collapse. And they're not heading that direction. All the numbers show that they're getting wealthier by the year.
I heard an interesting interview regarding the state of China's economy about a month ago. It was the expert who had spent over a decade doing business in China was saying that their banks, supported by their government, do not exercise under the same restrictions of liquidity or solvency, and that they can basically just keep going in debt basically indefinitely, and that may be a policy that they'll continue to pursue into the future, just basically debting themselves and operating at full capacity and building their country into this super. They talked about, we have large cities, right? We have large cities all over the world, and several of them in the U.S., but they're saying that the regions of China where China has a lot of the world's largest cities, but those are growing together to where there are going to be mega regions such as the world has never seen, of 100 million and more people. And just so on the appearance, on the surface, is frenetic economic activity, tremendous, unprecedented capacity and production, but that it's not based on financial solvency, but on unlimited debt. Where do you think, first of all, do you agree with that analysis, and where do you think that leads not only China, but all the other countries who pursue what appears to be a course of unlimited debting, as we can debt ourselves into prosperity?
Well, a lot of people and countries have pursued the policy of using debt to grow their wealth, and it's possible to do that. The question is, what are you using the debt for? Are you building something of value that's going to return? Are you going to see a return on your investment? Now, take the United States, for example. You can go to Google right now and do a lookup on the term deficit, and the Treasury will tell you that our deficit is about $400 to $500 billion. Yet you can go to the Treasury's page, debt to the penny, and go a year from any previous date. You can pick a year period, which I do frequently in my videos. It doesn't matter which period you pick in the last 3 years. There's $1 trillion being added. We added, I think a year ago from today, the debt was about 18.155, and we're at 19.6. That's 1.5 trillion. So that's 1 trillion more in 1 year's deficit than the government's even reporting. But basically, we borrowed 1.5 trillion more dollars than we received in taxes. And where did that money go? Did we take that money and build factories with it? Did we take that money and repair our infrastructure? No, we took that money. Most of the budget now is transfer payments. It's payments from one person to another. That type of thing is not even bad investment. It's negative investments. It's eating your seed corn. So, yes, I think that there are some things that China could do better. They should let their currency float. They should let foreign investors be able to invest in their stock market, their currency markets, but they have a plan. And unfortunately, it looks like their leaders are planning more for their success than our leaders are, certainly.
As you look at how all these global forces play out, your thoughts for the individual homeowner, family, head of family who wants to reduce risk to their family for if there is a financial collapse, especially as we look at the ill health of the U.S. Economy fundamentally. What do you think are some of the key considerations that people should do as basic steps they can take to help decrease risk for their family?
Well, you have to live somewhere. I mean, so I don't think there's anything wrong with having a modest 30-year mortgage. I mean, it's quite possible that real estate could get cut in half or even 75%. So there's nothing wrong with locking in, say, a 4% loan and paying a little bit extra and trying to get that principal down to where you can take any shocks. The rental market in this country right now is driven fairly high. Rent is very expensive. So the housing market's a really, really strange market right now. And we don't really know how much is being driven by foreign money. The West Coast of the U.S. and Canada obviously seem to be benefiting from a lot of backdoor Chinese money coming in. But I mean, real estate, I don't see that as any type of safe investment just because it's so illiquid right now. I don't really look at that as anything to consider for any type of crisis situation. Just something a place where you can live and pay down that principal.
Any other steps beyond trying to own the home that you live in and living within your means, it sounds like, that you would recommend for people? I mean, the subtitle of your site, Silver for the People, what is the gist behind that, and what do you mean by that?
Well, if you look at the definition of silver, the term for silver in various languages, I think the term silver is synonymous with money in 60 different languages or something like that. And traditionally has always been the people's money. The people have had copper and silver, and then the kings have had gold, and the merchants have had silver and some gold. So it's traditionally been the people's money, and the powers that be absolutely hate it. They loathe it. And the reason why they've suppressed its price is because it's not only money, but it is also essential in manufacturing due to the fact that it's the most conductive, the most reflective. It has various biocidal properties. And so it's a very, very valuable element, and various groups like the Silver Users Association, and you can look at various other writings about the conspiracy against silver that go back hundreds of years, and there's a lot of stuff out there. But for me, it's the people's money, and I think it's the way that the people can take back the power if they just realize it. You know, I think L. Frank Baum's Wizard of Oz, originally Dorothy had silver slippers, and, you know, the idea was that she wanted to return to her home and leave this crazy land of Oz with witches and wizards running around. She had the power with her the entire time. And the idea being that if enough people just recognize that real wealth is not some digital entry in a bank's ledger or a Wall Street stock certificate that you don't even own, that's controlled by the DTCC and can be shorted to, infinity. If they realize that that stuff isn't real wealth, then the Ponzi scheme will collapse. It's a gigantic confidence game that they're running, and it's the biggest one in the history of the world. When it collapses, I think it's going to be the biggest collapse in the history of the world. I'm not sure what's going to follow on it. A lot of them definitely are planning for world government. Maybe they want things to get so bad that people beg for a world currency or something like that. But I think that silver is one of the keys that people can use to protect themselves against what is inevitably coming due to the unbelievable irresponsibility of our elected leaders.
Well, I think that's a great summary, and we'd just like to let you get a chance to tell people where they can find you on the web and what resources they'll find if they go to your site.
Sure. We have a free public blog. It's Silver for the People, BrotherJohnF.com. There's a link on there to my member site, which is BrotherJohnF.biz, B-I-Z, if you want to sign up. I took my YouTube videos off of public ad revenues and things. We tend to pay for things with ad revenues, but as we'll just call it, the octopus gets larger, control in these things becomes stronger. So we decided to create a member site where people can sign up for a yearly or monthly fee, and then we can talk about things we want to talk about, have a small community, and I do a video update, silver update about every 2, 3, or 4 days.
Well, Brother John F. of BrotherJohnF.com, thanks once again for joining us and sharing your perspectives here with us and all of our subscribers and listeners here on Reluctant Preppers.
Absolutely. It was great to be on. Thanks, Dunnigan. 70 plus to 1, which, as Eric Sprott and Mike Maloney and many others have pointed out, doesn't make any economic sense because it's coming out of the ground at something like 10 or 12 to 1, and the amount above ground silver is a pittance if you look at dollar values compared to gold. So mainly concentrate on silver, but gold is definitely something to keep an eye on as well. You want to have some. I'm also into cryptocurrencies, Bitcoin being the granddaddy of them, but there's a lot of other alt cryptocurrencies as well that have some promise that offer differing features. Those are really the three main types of assets that are outside of the system, in the sense that they're not really digital entries on the Fed's keyboards, computers, et cetera, the bank's money, which is really just a series of digits, and not real value, which can be taken away at any point. Basically promises that can be broken. Now, a lot of people are going to argue Bitcoin isn't that, but I think if they would study it, find out that it's a decentralized cryptographic ledger, they would understand how it is the biggest crisis we're going to see, which is the decline of the power of the U.S. and the power of the dollar going forward.
So jumping right into that first topic then of how much gold and silver do I need to be financially secure if the economy collapses, where do you suggest people start in evaluating the answer to that question?
Well, I'm not a financial advisor, so I can't give financial advice. I can just say what I do and the members on my member site do is primarily concentrate on silver, simply because silver is so undervalued relative to gold. I think the ratio is still
with financial sound money and in freedom versus deception on finances.
Oh, my background, I've done so many things. I've been a stockbroker, a futures broker, spent some years in law school. Been a silver stacker most of my life, run various blogs since basically since the internet started, dealing with alternative media, conspiracies, etc. And I decided to do Silver for the People to just promote what I think is probably going to be the best protection for people moving forward, going into probably the big.
Welcome back, Reluctant Preppers. We have a returning guest tonight. Brother John F., founder of BrotherJohnF.com, Silver for the People, is here with us again on Reluctant Preppers. He's going to weigh in on how much gold and silver do I need to survive if there is a financial collapse, and also looking at protectionism versus free markets, especially as we look at concerns about dumping of foreign-made goods on American markets and how that affects our economy. Brother John F., thank you for joining us again here on Reluctant Preppers.
Well, it's great to be back, Dunnigan. Thanks for having me.
You bet. Could you give our viewers a reminder of your background and why it is that you are weighing in on all things having to do